Noob, you traded BA, Bab, and Mara. That's awesome. So guys, I will review your trades as always. Then if we have time, I'll go through my trades. I've taken 3 trades today, 2 winners, 1 loser. My best trade today was BAC. Where is BAC? BAC. Why don't I have it around here? I think my watch list didn't get saved. That's sad. This was my best trade from. Oh my god, it's still running. Now this is the FOMO, guys. So look at this. The average true range in this thing is around $1, and I knew that when a stock, and I'm telling this, when the stock is at all-time high, it usually runs, right? And you could see we broke up, we're at all-time high, and I could expect it to make a move bigger than the average true range, but I just decided to sell all at $1 move because I had 8 cents stop loss on this one. 8 cents stop loss, 80 cents move. That's 10R move. I didn't get 10R out of this trade. I got only 4.5 overall because my partials were so big on this thing. But I should have left a little bit for a bigger run. For example, the $40 round number or something like that. But I didn't. Nothing to be mad about. This is it, by the way. When you are in a winning trade which runs, you wish that you held it for a longer time or that you are heavier in a trade. When you're in a losing trade, you wish that you just exit all out a little bit earlier. So that's FOMO speaking, but part of it is analytical because we say this in the trade review session. If the stock is at all-time high, it usually makes a move bigger than the average true range. It doesn't mean that you should enter around here to the long side only because it's at all-time high and it could make a move bigger than the average true range. But if you're already in it with a really good average, you definitely should hold on into it. Mr. T, you're still in it? That's awesome. Because all of the financials were good today on the 60 and the daily. Look at this. The 60 was good. The daily at all-time high. JPM, same thing, right? 60 good. The daily is also awesome. WFC, same thing, right? 60 is good and the daily is at all-time high. Those ones looked so clean today, and all of them did the same thing. That's why I didn't just trade all of them. The JPM, WFC, and BAC. I missed JPM, in fact, and I didn't like the wick on it, so I thought that BAC is cleaner. Oh my god, why is it like this? Okay, let me link them on. I thought that BAC is more clean based on the price action. It's close to VWAP. We're having the engulfing with a hammer. That's why I decided to trade BAC rather than WFC and JPM. I had JPM on my watch list, right? Not BAC, but eventually they're all the same. It's like airlines, right? AAL, UAL, BA, they will be doing the same thing. See? But you will not be trading all of them, right, for breakout, or all of them for breakdown. You'll just pick the one which looks clean, the cleanest, and offers a better risk to reward, and you will trade that one. That's why I traded BAC. So let's take a look at your trades, and then I'll review all of my trades. Let me see how I can open those. So first trade is for Noob, and Noob traded Baba. Now let's go first of all from the bigger time frame, since we always do it, right? So Baba, look at this daily chart. We are gapping up, but overall we are downtrending on the daily chart. 60-minute chart, overall we are strong, but there is also a range, and if we break down, we could fill the gap. So looking at this, I know that Baba, it could either fill the gap and then go to the long side, or it could just simply go to the long side. And I personally don't trade these types of stocks because, as I told you, I don't like the 50-50 trades. I want to see that the stock is going to go more to one direction rather than the other. And looking at this gapping up and looking at the 60 above the moving averages, I'll be more long buys and I'll avoid the short trades, but that doesn't mean that you can't do it, because overall on the daily chart, it is weak and it could eventually just sell off either today or tomorrow. Now, this is what Noob did. Tried it first of all to the long side and got stopped out, and that wasn't bad, right? We said that, like on the daily chart, we gapped up, on the 60 we are strong, and I would personally prefer the long side, and that's what Noob also preferred. So he took it to the long side, and it got him stopped out. Then he re-entered to the short side and got stopped out. Now that was a really tight stop loss, Noob. If you're taking this thing to the short side, your stop loss needs to be at least around here, or at least the moving average, to give it some room. You can't have stop loss within the candle, because we know that the next candle could go all the way up, not make a new high, and then drop all the way down again. And because this candle is so big, you don't really need to give it room all the way up here and expect that it will go all the way up there and then drop down. Give it at least some room. Give it some room to pull back and then continue. And if it does that, you could add to your position. The good thing is that you re-entered on this one, and now you're having sort of a bullish engulfing crack and the bullish engulfing sandwich. And this is a bearish pattern. This is a good stop loss for these type of patterns. Partial down here, partial again, and there are again a lot of chop right there. So I guess you weren't really sure where it's going to go, right? No? Because you tried it to the long side, then you took it to the short side, then you tried it multiple times, I think, to the long and to the short, and then to the long one more time, and then finally caught the right long. So this is one of the problems, and at least in the long run, this could cause you to lose a little bit more. And my advice for you, because looking at your trades, you're trying to hold for a trend, and I like that fact. You are trying to let your runners run, you are trying to add into your position, and if this is your style, I'd recommend that you build some buys to one specific direction, either to the long, either to the short, based on what you see in the bigger time frames, then wait for setups for that particular direction. Looking at the daily chart, as we said, and the 60-minute chart, we saw that overall it could be more long than short, but it could also fill the gap. And this is what happened. First of all, it's filling the gap. Now look at this. Now it's simply downtrending, right? We need the 5-minute chart around here because this is after 10 o'clock. Let's go back to the 5-minute chart and see where and why was the good entry. So look at this on Baba. So it's dropping down, pulling back up, dropping down, pulling up. You're still having lower highs. You're still on a downtrend. Dropping down, coming back up, still on a downtrend, lower high and lower low. Dropping down, coming back up. Now you're having a higher high, you're having a higher low, you're having the first new 5-minute high candle. You fill the gap. You see this? This is the yesterday's high. This is yesterday's high. You fill the gap around here. That is the entry to the long side, and now you could just simply add in to your trend to the long side. Overall, looking at your trades, still, I mean, at least your winners, they were big. Your losers, you cut them so fast, and I see that you did well on both directions. Sometimes though the stops are really tight, which is something to work on. I like your entry. This is exactly where we discussed it and where we said the entry should be, right? The moment it filled the gap and started changing that trend, and you are long on it one more time, and you're still in it, and it could run more to the long side. Really well done, Nope. So let me see. I'm still in the trade, going long, added, and playing the cup and handle pattern. Okay, yeah, I saw that one. So you get 4 hours on the short, 3 hours on the long, overall 7 hours, right? What's the net overall on this one? Or that's the net already after the losers? No, that's also risk to reward. Oh, about 15 hours. Okay, no, that's really crazy, really good. I mean, look at the chart. I wouldn't really have assumed that you are up that much. Well done. Okay, it doesn't matter how much you lose as long as you end up green on it, right? So Nadia traded CCL, and that was a parabolic reversal, I assume, and this is a good one. I love this one so much. So look at these guys: 1, 2, 3, 4, 5 consecutive 5-minute candles. Then you're having a reverse MCD pattern. A lot of people will be taking this one to the short side around here, assuming that this is a pullback and this is a continuation. And this is where I would be waiting for a trap, for a fake breakdown. Rather than taking it to the short side, I'll be waiting for a long setup, and that's what Nadia did. Waited for the hammer, took it to the long side on a new 1-minute high. The thing which is annoying and which we don't like around here is what? Come on, guys. It still was a good trade. But what do we hate in this trade? Exactly, Nadia. The 200 SMA between our entry and our target. We should not take the entry unless this 200 SMA is our target. And you did it. You notice that this moving average could be annoying and it could block us or prevent us from reaching our target, which is the 9 EMA on the 5-minute chart. So just in case, you took a partial, which was smart. Now we're bouncing off the 9 EMA on the 5 and we could make a reverse FCD pattern. You exit the rest at the drop. This is good. I like this management. The patience on this one is also awesome. I like it. You avoided a lot of potential entries, which in the past I would have taken around here, and you took just the perfect one. Is this your main setup, Nadia? Or main strategy? Because you're doing really well with the reversals. Okay, I see that. Mr. T, I wouldn't say that there is an R goal or approximate R goal for the beginners. You need to check your average R return. If you are getting an average of 1 R per trade, I would say that 2, maximum 3 R goal would be enough for you. If you're averaging less than 1 R a day, I think 2 Rs maximum could be your goal. If you are getting 2 Rs on average per day, your goal could be 3 to 4. If you're getting 3 Rs average per trade, and remember average, that means that sometimes you're getting the 5 Rs, sometimes you're getting the 2 Rs, but it's an average of 3 Rs. You could have your goal at 5 to 6 Rs. Depending on how much you're making, on average, you should determine your daily goal. So Bobby, let's see what you traded there. So Bobby traded Ride. I honestly thought about watching Ride today, but I didn't like it for one reason. You made it work, which is good. You managed to make it work. This was a good entry. That's a good stop loss. I love that. You really managed this one really well. Then it's making a 3-bar play. So you re-enter. I would have put my stop loss somewhere in the middle. Adding at the break, which is also awesome. Nice partials. Exit the rest at break even. This ad, I personally wouldn't have taken it. You are on higher highs and higher lows on the 5-minute chart. You want to make sure that this thing is going to go in your favor before going for the continuation, especially that this was sort of a parabolic pullback where you want to see the M shape. This would have been a good entry, which unfortunately didn't work out eventually. Now let me show you why I didn't put Ride on my watch list today. Yeah, I saw that. That was tempting, right? Let me show you why I didn't like Ride. First of all, this was the range around here. And I wanted to take this thing to the short side below this level, 14.25. And unfortunately, it did this move in the pre-market. So the first thing I hated about Ride is that it did the break in the pre-market. And that was not small break. It was enough decent big break. Second thing I didn't like about it is that we're sitting closer to this level around here. You see? And this level around here is a strong support level. If we just zoom it all out, you could see that on this day, which is 12th March, you had a huge increasing volume at the low of the day or at the low of this time frame around here. And that's an exhaustion volume. Exhaustion volume means that there is a lot of buying and selling happening around here. And this is a reversal indicator. So this support level would be so strong. And the support level is a range. It's not exactly a level. So we're not sure if it's going to touch it or it's going to just bounce a little bit earlier from it. So you can see it's sitting at 1360. And the Ride opened somewhere around it. Let's go back. There it is. It opened somewhere around it. You see this? So taking it to the short side for 1 minute upper range breakdown, I didn't like it so much because of this level. It could just simply bounce out of it, which it did at that time, and then trend up. Second time, taking it to the downside is also not the best because it could just simply wick below it and then squeeze back up. So that day, the 12th of March, was a little bit annoying for me, and that's the main reason I just decided not to put Ride on my watch list. And you see how it's struggling around here. It's accumulating around this range, right? It's accumulating around this level from March 12th. So still, that exhaustion volume from there is doing its part or play around here. It's just chopping around, and it's doing something around this level. So maybe it will start reversing in the next few days, and maybe it will dump. We never know. But that was the main reason I didn't have to my list. Marcos. So Marcos traded NKLA. NKLA was nice. NKLA, I loved it so much. The daily on this one was really good. Sort of a clean reverse ABCD pattern. We're having room all the way down here, at least, right? The 15-minute chart range bounded. It didn't break the range in the pre-market. It broke it after market open. Could have taken it for 1 minute open range breakdown, which I think I did on this one, and then ride it all the way down here with a really good risk to reward. Missed the move, no worries. You see that's giving us a reverse ABCD with an M shape. The average true range is still not hit. I think the average true range on this thing is $2. So we'll just make sure right now. Entry on an M shape or a little bit later where you did it exactly. Nice partials. No reason to exit all out because market moves in waves. It doesn't just go straight down. It gave us the 3-4 candles. Now we should expect the pullback. 3-4 candles, then we expect pullback. 3-4 candles, then we expect the pullback. This is the way you should. This is what you should expect from this stock until the average true range is hit. So that was awesome, perfect trade. I like it. Let me show you the NKLA here, and I'll review mine at the same time. So what's the average true range on this thing? The average true range on this thing is somewhere around $1.40. Yeah, it's somewhere around $1.40. What happens at the open? 1 minute open range breakdown, right? There is the break of the level. I have it marked. I'm taking it to the short side. Stop loss somewhere around the body, around here. Taking my first partial at around 2 hours. Taking another partial at yesterday's low, I guess. Was it yesterday's low? Yeah, it was yesterday's low. Added for a small reverse ABCD pattern on the 1 minute chart, bouncing off view up with a 5 minute open in range breakdown. And unfortunately, this ad ruined my trade because my average became around here. It didn't work out, and I get subbed out the rest at break even. This wasn't a huge winner. That was a small partial at 2 hour, and it was a small partial at 3 hour, and I had only 1.5 hour after all, and I get subbed out. Why did I add? I added because we only did a move of 50 cents, and we could make a move of $1.50, right? That means we could move from 15.90 all the way to 14, at least 70. Okay, if we break the round number $15, I personally will take a big partial at $15, right? So again, this ad ruined my trade, no problem. You caught it around here. We're in an awesome place. No reason to partial here, but there is a reason. I mean, there is a reason to partial, but no reason to exit all out. You could add one more time and go for that 15 round number. MB, you could check the average true range in DAS. Right click on the volume bar, chart area. Let me delete this. Right click on the volume bar, chart area, add new area before. Study config, average true range. And then you'll have the average true range. But this is the average true range on the 60. It's better to add it on the daily chart. It could go to 15, which could be really nice. It might even break it and run a little bit lower because the pattern is so clean on the bigger time frames. You see, this is the way you try to just hold on to a trend. Always pay attention to the average true range. Pay attention to the minor details. Is there an exhaustion level, volume? Are there any levels on your way? Could it reach that average true range or not? Like the exact thing I did on BAC today, right? Just going in for that average true range. And the same thing I did on Microsoft, if you checked my review on it. So Joe, let's see this trade. So Joe traded NIO to the short side. Let's take a look first all the bigger time frames, NIO, right? Because we need to see what's happening right there. NIO, looking at the daily chart, it's like NKLA, small reverse ABCD pattern on the daily chart. But the difference between NIO and NKLA is that it's sitting within the candle. So it could go all the way up and it could go all the way down, right? I mean, it's not so clean. Let's take a look at the other time frames, which is the 60-minute chart. The 60-minute chart is stuck between moving averages, and I don't like it when they are stuck between moving averages, but it's more short than long because it's sitting literally below most of them, right? So looking at this, I'll be more short biased rather than long biased. Looking at the pre-market, look at this. I had my short area below 43.60. That was the range in the pre-market. But what happened? It broke it in the pre-market. Once it broke it, I just didn't like it. And that's why I typed to one of the members. We were watching, building the watch list. And I told him, and I just broke in the pre-market. I'm no longer interested in it. Why is that? Because we're having 3 consecutive candles. And after 3 consecutive candles, I could expect a pullback. And the pullback is higher highs and higher lows on the 5-minute chart. And after these type of pullbacks, I want to see a new 5-minute low if I want to trade this thing to the short side. And I personally will not take it to the short side for a new 5-minute low around here. Why? Because this 5-minute candle is just so big. 70 cents 5-minute candle. If it was pulling back slightly like this, then giving me a small 5-minute candle with 20-30 cents maximum, and then a new 5-minute low, I would take it. But if it's just making these candles, and then it's making this, I'm definitely not taking it to the short side and putting my stop loss somewhere up there. Those are so wiki and they are so big. So this is not tradable for me. This is not tradable for me. This is decent. This is where I would have given it a try, maybe. Short, stop loss, and I would have gotten stopped out. Now again, big candles, we hate it, and now this is what we like. Pushing back down with our direction, which we like on the 60-minute chart, with a decent small candle, right? How big is that? That's around 10 cents, right? Take it to the short side, have your stop loss, and write it down. 2 trades, and that would have been it for me. Let's take a look at what you did there on NIO. So you took it based on the 5-minute chart to the short side against the hammer. That's something I wouldn't have done. First of all, you are taking it on the 4th consecutive 5-minute candle. 1, 2, 3, and that's the 4th candle on the 5-minute chart, and we could expect a pullback after 4 candles, right? And the next thing the candlestick is our confirmation before our entry. So if you are seeing a hammer, it shows you that this candle after hammer most probably is going to be a long. So there is no reason to try to force it to the short side. If you see that there is a reverse hammer, like in this case around here, then yeah, you could give it a try to the short side. Indecision candle, yes, you could give it a try to the short side, but not after hammer. Make sure that hammers are your last confirmation before you're taking the trade, or not hammers, candles. Noob said, most of my pattern reads have been pretty good, but the thing that was killing me was my entry, chasing the price on the 1-minute chart and having the price reverse on you once you place the entry. I have been working on that and wait for a certain recognizable setup to show up. My mantra for trading is slow entry, quick to exit. No, that's really smart, too, and that's exactly the way you should do it. Most of the times, looking at the charts overall, you know where the stock is going to, and you know that eventually it will work out. But what's killing you is the multiple steps you are taking before the trade works. Those steps are taking with no confirmation. If the stock is just running without you, without giving you the confirmation, let it go. Trust me, you'll save a lot of money in the long term, letting these type of trades go without you, rather than just taking them, catching them once in 10 times, and then losing on many other trades, giving all the profits back. Alben, let's see what you traded. So Alben traded WFC. That's awesome. I like WFC. WFC, JPM, we discussed that, right? The financials today, they were so good. So on the 5-minute chart, you're having a hammer prior to the entry. We like that, right? On the weekly chart, it's a new weekly candle. That's good, actually. I mean, I rarely watch the weekly candlesticks, but this is really good to see. It's breaking the high on the weekly. On the 15-minute chart, it's a new 15-minute high. On the 1-minute chart, it's a 5-minute open range breakout. You partialed all the way up. You added at the pullback, which is really nice. The problem is you added on the way down, and this is something you don't want to do. This is on Oh my God, what's it? This is an evening star candlestick. An evening star candlestick is telling us that this stock could reverse or could pull back. So you want to wait for the new 5-minute high, which is here, and then add to your position and ride it up, rather than adding on the way down and then getting stopped out and missing the move. But live trade for 4 hours, that's awesome. Really good job, Alban. So Bobby traded also MU. Let's take a look at MU first of all here. So the 60-minute chart looks more weak than strong. The daily chart looks more strong than weak, and you are stuck between moving averages. And yeah, there is more room to the downside rather than to the upside, unless you are breaking the 94, right? So yeah, more short than strong. What did you do? You took it to the short side for 1 minute open range breakdown, held through the consolidation. I love that. 3 consecutive candles, definitely take a partial because it could make a pullback, which was here. That's our pullback. Now you're having a reverse BCD pattern around the retest area. So you re-enter and partial all the way down. Really good management, Bobby. No, let's see this one. So now trade LAZR. The daily chart on this thing is strong, right? But intraday it was selling off. Let's take a look at the bigger time frame as well. LAZR. Okay, so this looks like an evening star, and the evening star is a reversal candlestick pattern, right? The daily chart gapped up below a moving average, sitting below a strong moving average, which is the 50 moving average. In the pre-market, okay, this type of stocks I never watch actually. It doesn't mean that you shouldn't, but stocks which make most of the move in the pre-market, what happens to them after market open? They either go sideways or they sell off. So I actually like the fact that you traded it to the short side rather than to the long side. There it is. So you took it to the short for 5-minute open range breakdown and partial all the way down. This was a really good winner, I guess, for you, right? AQ, why did you trade BAC? What's in your watch list? AQ, on my watch list, I think I had JPM. I think I had JPM. Let me see. Let me see. I need to open each other. Let me actually see Discord. I think the watch list is posted on Discord as well. Watch list announcement. Where is Amen? There it is. Okay, so look. Today on my watch list, I had WFC, right? And I will not say that I'm watching WFC, JPM, and BAC because they're all financials and they're all doing the same thing. It's the same as putting AAL on my watch list, but trading UAL or trading AAL, right? It just doesn't, it literally makes no difference. I had WFC on my watch list, but I didn't like WFC because it was sitting below VWAP and it was sitting below the moving average. And then when it went around here, I didn't like the fact that it's a little bit extended, and if I take it to the long side at 4041 or 4045, I would need to put my stop loss somewhere around 4015, which is 25 cents stop loss. The risk to reward on this thing, I didn't like so much. I had also JPM. Where is JPM? And I didn't like it so much because this candle didn't give me the confirmation. This is a reverse hammer, right? And then if I take it to the long side to 158.70, I need to put my stop loss at 158.80. That's around wide. Yeah, that's around. Yeah, it's actually 50 cents stop loss. Again, 50 cents stop loss for me, it was a little bit too much. BAC though was so good for me. I mean, we opened, we dropped below VWAP, we held the moving average around here. We engulfed it. This is a bullish engulfing crack. We had a hammer as my confirmation, and I told you when I'm seeing hammers, I don't put my stop loss at the lows of the week. So I'm taking my entry 38.60, and I'm having my stop loss 2 cents above the week, 38.52, which is 8 cents, and that's a good risk to reward for me. My first partial at 80, which is 20 cents. 20 cents, that's around 2.5 hours. So BAC offered the good risk to reward for me, and eventually BAC, WFC, JPM, they're all doing the same thing. Does make sense, AQ? So twin brothers, hey, how did you do today? Let's take a look. So you are green for today. That's cool. Right, you traded this one to the short side for a small reverse ABCD pattern on the 1 minute chart. But look at this again. This was a parabolic pullback, and on a parabolic pullback, you want to see the M shape. There is the M shape, and that's your entry around here. See the 5? That is the entry according to our rules. And it would have failed anyway, as far as I see, but that would have been the better entry in this one. I mentioned the reason why I wouldn't have traded right today before you came. So if you missed that part, you can check the replay. It will be uploaded on YouTube. But Ride showed some strength based on the 60 and the daily, which is why it wasn't the best for trend trade to the downside today. Let's take a look at what the market is doing overall right now. So FCAL is looking weak, by the way, guys. This is a bullish engulfing sandwich. A bullish engulfing sandwich is a weak pattern. Overall, on the daily chart, we're sitting below the 9 EMA, right? And we're making now a new daily low. I don't like the wicks here on the bottom of the 60-minute chart. But if I would trade it anyway, it would be definitely to the short side. Stop loss would be somewhere at 25 for now. After the candle closes, and if it just goes a little bit up and then continues going lower, I would move my stop loss to where this 1 minute candle went for. So for example, if this candle closes now in a minute around here, then the next candle goes to 15.20 or few candles making smaller reverse ABCD pattern on the 1 minute chart, and then it breaks the 15.10, I would add to my position and I'd move my stop loss to that last high it did on the 1 minute chart. NIO. Let's take a look at this thing. So NIO is just choppy, and it's still sitting within the candle. FUBO, nothing. CCL, so wiki. I like CCL to the long rather than to the short side based on the daily chart. The 60 is starting to give us our nice range in the 60. So maybe actually later today in the afternoon, CCL will set to the long side. We'll take a look at that. JD, weak on the daily, strong on the 60, something I'm not going to touch. JPM, already did the average true range, and I'm not trading extreme reversals on stocks which are strong on the daily chart. NKLA still, look at this, NKLA went to the 50. See, increasing volume. Didn't we say that? I mean, the average true range is $1.30, which is 14.70, but we said definitely take a big partial at 15 because this will act as strong support. It's just a strong round number, 15, right? 20, 25, 30, 50. Those round numbers, they act as strong supports and resistance levels, but it went there, which is good to see. TGT, daily week, 60 strong, not watching it. Uber, choppy on both time frames, really huge move already, which is almost the average true range. XPEV, choppy. PLTR more to the short. If we manage to break this level around here, 24.70 in a pattern, not in consecutive candles. PDD is good. PDD looks really good to the short. The daily is weak. Reverse ABCD pattern on the 5-minute chart, breaking the lows on the 60-minute chart, stop loss somewhere at 143.90, and then go for down. So this one looks decent actually. Plug, same thing, nice range down here. We're breaking it as well. This looks really good. This one is choppy, and this one is it. So yeah, that is it. Do you have any questions, guys? Let's see there. You see it's still dropping down slowly at least. Okay, so if there are no questions, have a good day, everyone. Tomorrow I'll be in the chat room 12 p.m. Eastern. If you get any questions, email me, ayman@bearabletraders.com. Trade review session will be uploaded in around 15 to 20 minutes. And that's it. Have a good day. Bye-bye.